All right, today we have a trade breakdown of two of my most recent trades from yesterday. This is called the Breakout Strategy. So essentially I trade options, I wait for breakouts to go long, and then I gradually take profits. So I'm going to kind of walk you through what the setup looks like, when do I get in, where do I put my stops, and when do I take profits. So the first stock is Rambus Inc. It is RMBS. I will not lie, I do not give much importance to what the stock is, what it does, because really I'm only going to be in the trade for a few days and I'm looking for specific technical setups. In this case, you can see it's pretty clear. This is what we call a bull flag. The stock went up, then we have some consolidation sideways. I drew a beautiful little trend line here, and essentially I'm just waiting for a break of that trend line in order to go long. So what do I look at once the setup is there? I put alerts on TradingView, and then what I like to do is, well, not what I like to do, but what I need to do is then I go down to the 5-minute chart and I wait for the stock to break. So now as we go to the 5-minute chart, you'll see this is the day of yesterday. So yesterday we broke that level and we had a 5-minute candle close above the trend line. So essentially what happens is once I get that 5-minute candle close above the trend line, I enter the trade at market. All right. Sometimes you get a little pullback, that's great, but yeah, you don't want to wait too long because essentially this is a sign that it's breaking out. Then what do? We put our stop loss at the low of the day. So as you can see, I have my alert there on TradingView that will tip me off if ever it goes below that level. And you'll notice that I'm using a few different moving averages. The key here is you kind of want to hold the moving averages on like higher time frames. I tend to go look at the 15-minute after I'm in the trade, just because I don't really care what's happening on the 5-minute. I'm holding this trade for usually at least a day or two, sometimes even 3-4 days. So yesterday, stock kept moving up, held the moving averages perfectly. We closed, then we gapped up at the open, and now we're moving higher. I haven't not taken profit yet on this trade, but I will probably remove 50% of my trade soon, and that will be somewhere around the 50% profit mark. And then I have very small size, so I'm going to hold to the other half of my trade to ideally, hopefully about 100% profit. So that's kind of what we're aiming for. So that's the breakdown of this trade. This is what it looks like on the 15-minute time frame. As you can see, it's still running, so there's no real reason to exit this trade. So the reality is, once I take 50% out, I'm going to wait and see how we react at this high. If we just break through it and run, I may hold a little bit more. If I see that we're struggling to break above that on like the hourly time frame, then I will most likely just exit. And so that's pretty much it for Rambus Inc. And then if we take a look at the second trade, it is IREN Limited. And similar here, you can see I already took one contract out. But as you can see, the setup looks really, really similar. We have something like a bull flag. This has been running really hot. In order to find these setups, essentially, we have a little screener that we use. There's some specific criteria that I put into the screener. I'll make a video going through all of that. But you're looking for stocks that have some hype, some momentum, some good earnings, any sort of positive news behind them that will help them move higher. And so similar setup here. We had, a large move up over the last few, days and weeks. And now we had a bit of consolidation and we're waiting for this break above. Same thing. We got that break yesterday. So if we go down, I'm just going to go to the 5-minute here. So this is the day of yesterday. So this one broke early on in the day. Now you'll notice, you see this one broke. I got in on the breakout, so here, and then it retraced a bit. So ideally, I could have got in on this little pullback, probably would have got a bit of a better price. That being said, the stop loss was at the low of the day, never came back that far, and it kind of had a bit of a hard time in the afternoon. It kind of just ranged a little bit, but again, it held the trend lines really, the moving averages really well, stayed above the trend line, never came back. It closed the day with a little bit of a pullback, but then again, same thing, today it gapped open. I took profits on this just before making this video. I took 50% out. I only had 2 contracts, and so I'm going to let the other one run. And if you take a look on the higher time frames like the daily, this still looks really good. Like, there's no real reason to take the other half of the trade out unless I see that on, for example, the next few days it's struggling to move higher. But I would expect or hope to see this go all the way to about 65, 66. And then at which point, similar, once things reach all-time highs, you tend to see a lot of people take profits. So that's where you need to either, if you're holding really small size, I'd say you can weather the storm. And if your contracts expire in a far enough date, same thing, you can afford to give it some time. Now, you may be wondering what contracts I'm trading. In this case, I went a little bit further out. I took the November 21st contracts. Today is October 24th. So that means I got in yesterday on the 23rd. So I went about 3 to 4 weeks out. I wanted to give these a bit more leeway. Typically, I trade 2 weeks out, and I've been having some less good experience with the 2 week out contracts. So I'm kind of testing different things out, try to give myself a little extra leeway, a little more time. And also it gives you more space to leave it run. So kind of what I was mentioning earlier, if this hits all-time highs and I see that it's kind of struggling, but it's flagging again, or it's making a bit of a wedge or a pennant at the top here, I might just hold and wait for a second push higher. It kind of depends on how market reacts. And again, I already took partial profits on this. So I'm already quite satisfied with this trade. And so, yeah, that's the breakdown. This is my trading strategy. It's called the Breakout Strategy. It's very simple. There's a lot of stuff online about this. You could look up even on investopedia.com. They have a whole page dedicated to the breakout strategy, and that's just how I happen to execute. Full credit to a young guy called Johnny Options. I joined his Discord. I saw his YouTube videos. A lot of insight. I learned quite a bit, and now I'm putting this into practice. And so, yeah, I hope you guys enjoyed, and I will make a breakdown of the screener next to show how do we find these stocks. Like, what are we looking for? What's important? In the world of breakout trading, it's quite simple. You want setups that look quite bullish. You want setups that have a nice amount of volume coming in, and you want stocks that move quite a bit. So their average move per day. You don't want things that really don't move much, because then you're going to end up having to stay in the trade for a really long time. And when you're trading options, you want quick moves, big moves. We say it's swing trading, but really it's kind of day trading / swing trading, because in certain cases, if a stock moves a lot, I'll take profits in the same day. So hopefully this helps. Hope you enjoyed. Tune in for the next video. Thank you. Have a good day.